How's it going, everybody? It's Stas here. So in this video, we're going to be going over how bad news is good news, which in and of itself makes absolutely zero sense. But when it comes down to the economy and the stock market, it makes perfect sense. So we're going to break it down today. So hit that like button, take a sip of your coffee. You're going to need it. Check out my Patreon link down below for more content and exclusive access to everything I'm doing in the stock market. And let's get right into the video. So you guys know the Federal Reserve has played a huge role when it comes down to the stock market. And yes, we're going to talk about the Fed in this video, interest rates. I'm going to break down a little Q&A with the Philly Fed chairman, president, which I was reading about earlier today, and we'll talk about the August jobs report data, which was pretty weak. We'll briefly cover that. So the markets as of late have been selling off a bit, probably in anticipation of the September Fed meeting, which is next week. I believe it starts next Tuesday, and in anticipation of the inflation data that we're getting tomorrow. If you guys didn't know, we're getting the August CPI number. It comes out tomorrow morning here on the East Coast, about an hour and a half pre-market, which is going to fluctuate the markets and move the markets, no doubt about it. And we've been selling off. You guys can see SPY is currently down about 2% over the past week-ish, 10 days, which really isn't anything in the grand scheme of things, but hey, it's something, and we can see it's pulling back towards that 180 moving average on the 4-hour chart. And if we pull up the 5-day, 5-minute, we're noticing today's pre-market rally was a bull trap, and we will talk more about this in the video later on today, so make sure you guys subscribe. And this CPI number that we're going to receive is such a big metric to watch out for. And again, in the title, you saw good news is bad news, or rather bad news is good news, which is crazy when it comes to real life topics. But when it comes to the Fed and the stock market and the economy, it makes sense, because if we get a worse than expected inflation number, meaning inflation is running rampant, which it has been, and it's higher than what estimates were, the Fed could push back tapering the bond purchases, which in turn would help the stock market. So bad news in inflation, which hurts everybody, some more than others, right? This is going to be bad news for the economy, but it's good for the stock market, because the stock market is like a drug addict at this point, right? You guys have heard this analogy with all the money printing, all the QE. It's kind of like giving a junkie the needle, right? Continuing the habit, giving the junkie the needle, and the junkie wants the drug more. It wants it for a longer period of time. In this case, the stock market, its main drug is QE and 0% interest rates. So it wants this longer, and what is going to keep the drug addict, in this case the stock market, continuing receiving its drugs, in this case QE? Well, a higher than expected inflation number, which again is going to push back the bond purchases, or the tapering of the bond purchases. And this works in the opposite way as well, right? If we get a better than expected inflation number, let's say inflation isn't as bad as we thought, the Fed could taper bond purchases a lot sooner, which in turn could hurt the stock market. And in that case, we could see a sell-off, which I wouldn't mind. I'm ready to buy some stocks. I'm ready to buy at lower prices. So either way, I'm ready, and I'm waiting, and I'm excited to see what the heck is going to happen these next couple of days. And of course, next week, when we do get Chairman Powell talking, Q&A, the Fed meeting, and all that good stuff. And we had the jobs report, which is interesting, because the Fed Chairman Jerome Powell, he keeps saying we need stronger jobs growth, we need unemployment down, we need just the jobs numbers better before tapering and raising interest rates, and the fact that we saw a pretty weak August jobs number. The economy added a disappointing 235,000 jobs during the month, falling well short of the 733,000 from a Bloomberg survey. The fact that we saw weak jobs numbers, that could also lead to tapering being pushed back even more. And on top of that, if the inflation number is way worse than expected, I mean, this is going to be, again, it's bad news for the economy, but it's going to be good news for the stock market. And I could see a rally coming if we do get bond purchases, the tapering of the purchases pushed back. I could literally see a rally coming in that instance. So what do you guys think? I mean, I'd love to know, as always, your opinions on everything. I mean, I'm not here acting like a know-it-all, thinking I am the smartest guy, a genius, because I'm not any of those things. I'd love to know your input. So drop me a comment and make sure to smash that like button while you are at it if you guys are enjoying the video. And let's pull up very quickly Safari. Let's see what's going on here with the previous inflation data numbers, or numbers, whatever the heck you want to call it. Let's take a look here together. So this is the 1 month % change in CPI for all urban consumers, seasonally adjusted from July 2020 to July 2021, right? So you can see clearly ever since February, January, December 2020, Jan 2021, Feb 2021, we've been seeing an increase in the CPI number, and we had a pretty big dump off in July. We hit a high of 0.9% in June. July was 0.5%. So if we get a print of, let's say, August 0.3%, 0.2%, that's probably going to lead them to tapering sooner than expected. But let's say we got a huge jump. Maybe we test that June number of 0.9%. We get 0.7, 0.8%. That's going to be pretty high, in my opinion. And they could push the taper back at that point in time. So I'm really focusing on this graph. Again, it's increasing over time. And we saw the Fed chairman, or not the Fed, actually he is the Philly Fed chairman, which I'm from New Jersey. I went to college in Philly, so that guy's in my area. What's his name? Patrick Harker. So we're not going to talk about everything he was saying here in this little interview. And if I remember, I'll link this down below for you guys to take a look at it. But he talked, it's a typical Q&A. August jobs are below market expectations. How do you see this will affect the tapering discussion? He says there's no sense in my mind that there's a lack of demand. If you look at the latest job openings and labor turnover survey, we have record numbers of job openings, but there's not a demand for jobs. It's supply issues. And I guess that makes sense because everybody's just been getting free money to just stay home, and they make more money from staying home than working a job. So I guess that makes a bit of sense right there. And do you think it's appropriate to announce plans to start tapering at the upcoming FOMC meeting? That has not been decided, and I'd rather not comment. Of course, he's dodging that question. What is your forecast for when interest rates will be raised and the factors that will determine it? My forecast is late 2022 or early 2023. If you start this tapering process, let that sink into the economy, and let's see how this affects the market and how the markets react. And I completely agree with that. Honestly, if the Fed were to cut or raise interest rates and taper back on bonds at the same time, that's not going to be good. Let's just put it that way. So I agree with that. And he says, I do have some concern that risks to the higher inflation that we expect are elevated, and so I would like to leave open the option of a rate increase, but again, that depends on the state of the economy. Has there been any change in your forecast for policy rates compared with the previous forecast in June or March? No, not for me. Let's see here. Why is there an elevated risk of higher inflation? Let's see here. That he said one of the real advantages of the Fed is our decentralized nature, the 12 reserve banks, yada, yada, yada. I'm not going to go over that. That's too long. But he says, my baseline forecast is still to have inflation around 4% this year, ending the year, and then starting to fall back to 2% over the years 2022 and 2023. So in that case, he thinks inflation is transitory. And as you guys know, inflation's well over 4% right now. Let's see what else he said. Okay. There's another question here. Oh, this one's good. Do we need a digital dollar? I don't think we're ready to move in that direction right now, but we need to be thoughtful about if a central bank digital currency was put in place, what would it do, for example, to the banking system in the United States? What would it do to other institutions in the United States? That's what we're trying to understand. Okay, that's fair. What else did he say here? There's one more. How will COVID-19 Delta affect the economy? The fears in March we have come true with respect to the Delta variant and other variants that are hitting. We're seeing people pulling back on air travel. We're seeing some pullback on hospitality and leisure because of this. Even before governments put in restrictions, families and individuals started to make decisions that they felt were the best interest of their family and not go to the restaurant, not take the trip. We need to get Americans and really the whole world vaccinated, yada, yada, yada. We've heard all this. And, I mean, you guys have seen with football now starting, NFL, college, these stadiums are 100% packed. So I don't think people are as scared as they were back a year and a half ago, which makes complete sense. I mean, the vaccine's rolling out. Most people are vaccinated. People want to get back to normal life. So that makes sense to me. And overall, I mean, that's pretty much it, guys. That's a quick little rundown of the Q&A, kind of my thoughts there sprinkled in, the CPI number, the charts, jobs data, and how bad news is ultimately good news. So if you guys want to chime in, drop me a comment, smash that like button, turn on the notification bell as you subscribe to the channel. That really helps me out. Thanks, guys. And check out my Patreon if you want all my real-time buys, sells, call-outs, a morning update video, private Discord access to me throughout the day as well. All of that's on Patreon, link down below. Or you guys can go to StasSurfS.com/Patreon. And I make a video, like I said, every morning for the top tier members. And we will be breaking down the, what's it called? The CPI data in the morning, how it's affecting the markets, real time. We're going to break it down. So I'll see you guys there. And get your $50, or now it's $30 from M1 Finance, 2 stocks from Webull. Those are linked down below. I'll catch you guys later. Keep crushing the markets. Stay safe out there. Peace out, guys.